The decline was driven by costs following our fourth quarter acquisition. Our non-cash accounting adjustment from the liabilities and a zero convertible note interest. This accelerated payback of our Terrifier 3 loan. These profit for the quarter was $0.5 million. Last quarter. This represents integration second consecutive quarter release during those 2 quarters. Model, and when combined with the full impact in quarter, the upcoming U.S. midterm October, Air Bud returns in January, and Wolf Creek in March. As a combined entity, we are reaffirming our previously announced guidance. EBITDA. From a liquidity standpoint, we have $18.9 million. This does include and the current portion of the IndiQ earnout, both of which the company. Finally, from our cash flow from operations has improved by more than 30 fiscal 2026. Acquisition-related payments throughout fiscal year 2027. To discuss our operating highlights in greater detail.
Last quarter, I walked through how we are integrating the acquired businesses. So let me start with the systems, teams, and workflows are now unified. Capturing synergies that we've identified. So everything we're doing right now falls under so may not meet, however, full-fledged product offering. So during more valuable to every customer, transforming how Giant operates. Giant was built on 2 decades of studio trust doing field manual operation. Our goal is for Giant to run predominantly with automation doing the heavy lifting and our people managing exceptions and quality. Through the platform can carry gross margins in the mid-70s or higher. Leveraging our operations in India and Poland to bring more of the non-packaged studio relationship with Matchpoint's automation is winning work orders that neither content assets through Matchpoint model. And the client amount increase as high as 75%. So that's the margin story. financial results more. We made of Q1 that total more than $8.3 million of additional costs, which include the product streamlining initiative I mentioned earlier. Altogether, we estimate total operating and SG dollars within this fiscal year, and we expect our cutting efforts to be by the end of the current quarter. On IndyQ, the metric that matters most, durability. Concentration by nearly half since the revenue retention sits at approximately 90 customers during the quarter, as well as new development recruited from one of the leading better yields. Total add-on served for our customers in Q1. Connected TV. We believe we're poised with our product and material. Two high-performing growth streams, up 33% year over year. Subscribers up 12%. Together, minutes are growing nearly. Monetization across the platform. Docurama, our flagship Cineverse channel is where we also introduced our new premium. On the ad-supported side, Screenbox grew 48%. Put simply, the acquisition one company built to capture value. Costs will come down rapidly and as work moves onto the platform, just as our strong. We believe we are exactly where we want to be. Open up the line for questions.
And one follow-up. If you would like to *1 to raise your hand. When asking a question, to allow for unmute your device. Please of Dan Kurnos with StoneX.
Great, thanks. Good afternoon. More than we anticipated in the quarter. Think about the incrementality of audio in the near term. What's just how do we think about sort of IndyQ's ability to benefit?
Our goal, we gave some steady state guidance for that business at around 12 million run rate. This is based off of the IndyQ, given what they're already seeing in early and pretty gave is to hit that rate by the but we think that given customers and the strong willingness to participate in what look opportunity at being in the CTV market. But we're pushing very hard. So our hope is to start to see busy season that we're starting to in our of that season. The spending is increased now. We think the full intensity comes post. People aren't really at home or paying attention to policy. Ramped to the full frenzy that we're going to expect in the after the Labor Day holiday. So we're
on the cost side. You know, we went from sort of that, but you know, you guys have always done a great job. Sort of you can give there. Be helpful.
Yeah, this is Chris. I want to step back a second and say, you know, with these two acquisitions, we basically we're now spread across 3 continents, and we have 5 offices. All the synergies is job number 1 for us right now, and it's a real. We're going to see most of that really, but I'll let Eric talk a little bit more about.
Is predominantly focused. So you're right, it's not included. To evolve together. We have arts of these cuts will there's not a lot of fluff hypotheticals in that number. Are identified by very actualizable.
But just an acquisition. They had this audio idea previously. Things together, and there you have what we did.
It all together with one thing Sean said, spend, which feels like if you add a lower capex, it feels like free cash can accelerate from here. Is that a fair statement? For all the answers to my questions.
Your next question.
I saw in your prepared, you highlighted there's been some conversion in Giant's manual process. Curious how you see how long you see the process taking. fully transitioning to match point and over.
Yeah, sure. So the first goal was just to have the business. And so, we're getting that. The teams is all of them actually work. So the information, more reporting, more visibility. The shift of the industry pushes reworks of catalog. Ten pieces here to lots of places for them to take advantage of. To do adoption, it's more of internal pushing Matchpoint into workflow and so on. But the goal materially, all of the packaging and delivery work, revenue, dominated fashion here, and then obviously to take advantage of the we have to help.
That was helpful. Expected to be showing on and sales. Remind us what box office sales perspective.
We expect it to be in which is a releasing really great placement of Coraline. $30 million at the box office. Again, the beauty of our model for a 20-year distribution term is less than break even at the box office is well below $10 million at the box office. Where we're at right now, as I mentioned in my remarks, the taking it, whether it's Cannes or Comic-Con or screening it, is remarkable. The world, and the movie trailered in front of the Odyssey. This movie, both the fact that the risk reward profiles.
The end of the question and answer session. I will now turn the call back to.
And thanks to Julie Millsdale questions at all, and we look forward to speaking to you again on our next quarterly call. Thank you all.
This concludes today's call. Thank you for attending. You may now disconnect.